But this is investing 101. I mean, there's fundamental and technical. You know, cash flow 101 is fundamentals. Cash flow 202 is technical investing, okay? So there's two basic investments. One is cash flow. And as Kenny already said, this is the hardest. It is the hardest to find because cash flow then affects return on investment. So if I put in $10 and I get $1 back, that's a 10% ROI. Okay? I mean, it's just simple. I mean, I was taught this as a kid playing Monopoly. You know, you get one house, you get $18. You get two houses, you get 36. I mean, it's not, you don't have to go to college. It is not that hard. Monopoly is a cash flow game, right? And that's it.
Yeah, and the problem is that the people that you're seeing in the paper today, their philosophy is not based on this, period.
No.
It isn't.
But they've never, I mean, this is as simple as it gets. Technical, fundamental, cash flow versus capital gains. I mean, you know, if you play Monopoly, you'll understand this game. This is all there is. So when you look at Cash Flow 101, this is called fundamental. And this is called technical. And the reason it's technical because it's all emotion. It's up or down, up or down, up or down. As Kenny says, what's your net worth, what's your equity, depends upon the emotions of that time. So, I mean, these morons haven't got their lesson yet. They're going in to buy a foreclosure that was here to go on the same thing. One more time.
Well, yeah, and here's the ironic thing, is that all these people that are losing everything, they're going to blame it on the real estate market.
Yep.
They're not going to take ownership of the issue. They're going to blame it on the market. And at this time, I'm making so much more money than I was 2 years ago.
Let me ask you this. You just built your house, right?
Yeah.
Okay. And Kenny has owned multi-million dollar properties, but only after he was a rich man did he build a house. And what poor people do is they buy the big house on emotion, technical, and then they never buy on cash flow. That is oh, I have the house of my dreams. What a freaking loser are you? How stupid can you be? Kim and I live in a tiny little house on 16th Street here. We paid $117,000 for it. Monthly payments were $300 a month, including homeowners association, who were ripping us off. Oh no, the homeowners are the biggest crooks I've ever met. Homeowner means crooks. That's what it means. They're the biggest crooks I've ever met in my whole life. Nice, honest people, you know, but crooked as they come. They're ripping you, stealing, you know, all this stuff. But we sat there and we bought cash flow, and our little house just sat there, and it sat there, and it sat there with this dinky little house. One day we popped up and we had a lot of money. Then we bought a big house. The same as Kenny. If you can understand what we're saying to you, it's just fundamental of rich people. And poor people want the big house, the BMW, the nice cars, and all this stuff, but they don't have the cash flow to support this. Do I make sense, you guys here? That's the difference.
One other thing I wanted to add is I happened to be in Calgary 2 weeks ago, and Calgary, just as a city, appreciated 50% last year. So when the
why is Calgary appreciating right now?
Anybody?
Oil. Why did we just buy in Oklahoma?
Yeah, oil.
I mean, wherever there's jobs, you buy real estate. Why are we not buying in Michigan? General Motors.
Yeah.
No oil.
Yeah, Japan.
Japan.
But what's interesting is that whenever I do a talk, I always like to start out and ask, how many flippers there are in a room. And there's probably 200. And I said, okay. I go, I said, how many people are flippers? 200 people raised their hand. And I said, how many people wish they wouldn't have flipped a year ago? 200 people raised their hand. So the point is, it doesn't matter if the market's going up or the market's going down, it's a bad strategy because those people, those 200 people, would have had another 50% in value based on appreciation if they would have not flipped. So it doesn't matter if the market's going up or the market's going down. You might be able to time a quick buck here and there, no question. But the truth is, people that flipped in Phoenix in 03 lost 70, 80% in value. If they still would have owned the home, they would have owned it for a lot less, and it would be cash flowing now, because now what's happening is rents are screaming. Rents are going up dramatically.
And populations, Phoenix is still the #1 and #2 growth. Arizona is the #1 or 2 growth state in the nation. As the baby boomers retire and the hurricanes hit Florida, more come here. It's just fundamentals. This is called demographics. That's why I show you this here. A nation of 300 million in 10, 15 years will be 350 million. They got to live somewhere. And the dollar's going to keep dropping. The price of oil will keep going up. Gold will keep going up. Silver will keep going up. And replacement costs will keep going up. So these flippers got effed. It is really stupid. These guys here. So for Kim and I, our strategy wasn't to own one big house. Our strategy was to own 20 houses, then we live in a little house. And then we went to 500, then we bought a big house. That is the difference between rich people and poor people. Poor people want to look rich, and rich people want to be rich, right?
Yeah, I mean, it's the same thing. Any money that I had, I put into real estate investment, and because that's what I do. So I obviously could have put that into my home, or all cars and all those kinds of things. I could have bought all those things. And in the cash flow game, those are called doodads. But I didn't. I continued to pour all our money in, and we always joke around because we're literally always broke. Because if we have money...
Wait, no, I want you to know
it's the
how
truth.
True. Kim and I right now are cash strapped. We have no cash. I mean, we are so tapped out. The reason is because we're investing like wild people. Do you know what I mean? I don't have savings. I don't have jack. We have a lot of assets, a lot of cash flow, but that money just keeps going back out. It doesn't stay with us. Your first investment, was it cash flow or capital gains?
My first investment was cash flow.
Why?
Because I wanted that money coming in. My biggest concern is I was going to put money out and not have anything coming back in.
And how much was your first cash flow?
$25 a month. But it was a start. And I learned so much on that one property, but it did cash flow.
And how much cash flow do you have a month now?
Oh, about 120,000 a month.
It's not Donald Trump's money, it's not Warren Buffett's money and all this, but 120,000 a month is more than a lot of people make a year. And she doesn't have to work for it. That's not all the rest of our investments. That's not from oil, gas, and businesses and stuff like this.
Well, but that's what we talk about. I mean, that's freedom, is when you don't have to work anymore because you got that money coming in every month. We talk about when we first retired, was 94. We only had 10,000 a month coming in every month. That was it. But we only had 3,000 a month going out. So we were free. So it's not the dollar amount. It's can you cover your expenses and be free? Because after that, then we were able to get on with what it is we really wanted to do.
Right.
But most people are so busy working for that paycheck and just surviving every day as we were, that they don't have time to really think about what is it I really want to do.